usually go live on Fridays. We usually stick to Tuesdays here, but I have been watching my inbox, having lots of conversations, seeing some comments, and I keep seeing the same thing. And that is that people are scared and they're confused and they're asking what they should do right now. So we are scrapping our regular show this week and we're going to do this instead. So we're going to talk about exactly what's happening in the market right now. We're going to talk about why it's happening, and we're going to talk about what does it actually mean for you. For those who don't know me, I'm Leah Hadley. I am the founder of Intentional Wealth Partners and the Empowered Sisterhood. I've been a financial planner for nearly 2 decades and have sat with clients through, back in 2008 when the market crashed. We sat with clients through the COVID crash, right? We have been through the scary headlines. And I'm here today to give you the straight truth, not the panic, not the noise, not the clickbait, the truth, okay? Because before we dive in, actually, I do have a quick reminder, and that is, since it is Intentional Money Moves, everything we talk about here is for educational purposes only. Investing always involves risk, including the potential loss of principal. So nothing I share today should be construed as individual recommendation for your specific situation. I do encourage you to reach out to your financial advisor if you do have specific questions about some of the things that I'm talking about today. So let me tell you about what's going on, because I think understanding the why is really, really important. Okay, so what did we see this week? We saw the markets were taking a hit. The S&P is down, the Dow is down, the Nasdaq is down. The VIX, which is essentially Wall Street's kind of fear gauge, has spiked to its highest level in 4 months. So what really sparked all of this? Quite frankly, we were seeing several things colliding at once, right? First, we have the U.S.-Iran conflict has escalated and is disrupting oil flow. One of the main oil moves. And so when it's uncertain that oil prices spike, inflation fears come back. And when inflation fears come back, investors get more nervous about interest rates and slow growth. And then there was the morning's job report, which came in weak. Payrolls had dropped in February and previous months were revised down. And that's just not what the market wanted to see. And then third, tech and software stocks have been under pressure for weeks, partly driven by fears around, AI tools disruption and kind of some of the legacy software businesses. What does that mean for them? But there's also, real structural questions that the market is really wrestling with right now around AI. All of that together creates what you're seeing, right? Scary headlines, red screens, a lot of anxious people in the comment sections of various videos. Here is what I want you to hear. This is a lot of things happening all at once. It's a lot of things happening all at once. It feels like a lot because it is a lot, and your feelings are not overreacting. And also, this is not the end of the world or your retirement, okay? This is not a 2008 moment, right? A lot of times that's the moment that people look back to when they really think about fear in the market is 2008. In 2008, the financial system itself was cracking, right? Major banks were failing. Credit markets were frozen. The underlying structure of the economy was at risk. That's not what we're seeing right now, okay? Right now, we have geopolitical uncertainty, and that's driving short-term sell-off. Those are two very different things. And I'm not going to pretend like I have a crystal ball here. Nobody does. What I can tell you is that when we look at historical patterns, geopolitical events have typically had a much shorter impact on markets than people expect. And actually, markets have absorbed geopolitical shocks over and over again. Now, we are also very aware that we are in an evolving economy. Things may or may not play out the way they have in the past, right? The world looks different today than it did in 2001, than it did in 2008, than it did in 2020, right? So we look at history for context, we look at history for perspective, but we never look at it as a guarantee of outcome. And I think that's really critical to be aware of, right? It's also not a signal that you made the wrong investment decisions. I'm going to say that again. It is also not a signal that you made the wrong investment decisions. A down week does not mean your strategy is broken. It means you're in the market, which is exactly where long-term investors want to be. And it's not a reason to move to cash. I know that that feels like safety. I do know that. It's not. Moving to cash locks in losses and puts you at risk of missing the recovery. And markets recover, right? Every single time in history, the market has dropped, it has also recovered every time. That does not make the drop feel less uncomfortable, but it does matter in terms of how you respond to it. So if this isn't a catastrophe, what is it, right? Might be a correction, might be a buying opportunity. It might be exactly the kind of moment that 5 years from now, you look back on and say, oh my goodness, am I glad I didn't panic, right? Here's the fact. The best days in the stock market often come right after the worst days. If you sell when it drops, you frequently miss the bounce. That's the trap that derails long-term wealth building, really more than anything else. And if you have money sitting on the sidelines that you've been waiting to invest, a moment like this is worth paying attention to. Not because I'm telling you, go run to the market, right? Time the market, but because assets are cheaper right now than they were a week ago, right? If you are contributing to a 401k every paycheck, don't stop that, right? You're buying more shares at a lower price right now. That's not a problem. It's an opportunity. And that is exactly how long-term wealth gets built. If you are close to retirement and you are genuinely worried about sequence of return risk, this is an important conversation for you to have with your advisor. Not a reason to panic, but it is a reason to review and make sure your allocation is appropriate for where you are in your life right now and your timeline, right? Fear is not a financial strategy, but intentional action in the middle of fear, that works, right? That's how wealth is built. Okay, so real talk. Here's what I actually want you to do, okay? Step 1, close the financial news tab. Yes, you heard me. Close the financial news tab. Seriously, the 24/7 news cycle, it is designed to keep you anxious and clicking. That's what it's designed to do. It is not designed to help you make good financial decisions. Check in on it once a day at the most. That's plenty, okay? Step 2, do not touch your long-term accounts out of fear. Say that again. Do not touch your long-term accounts out of fear. If your investment timeline is 10, 15, 20 years out there, the noise this week is not relevant to your outcome. Do not make a permanent decision based on a temporary situation. Do not make a permanent decision based on a temporary situation, okay? Now, step 3 is to look at your actual plan, not your account balance, your plan. What were your goals when you built your strategy? There been any changes? If not, then that plan probably hasn't changed either. Step 4, if you don't have a plan, now is the time to get one. This week is a fantastic example of why flying blind with your money can be dangerous. When you have a real financial plan, you have an anchor. You know what you're doing and why. And panic is not part of that plan, okay? Step 5, if you are genuinely worried, get on the phone with your advisor. That's what they're there for. If you don't have one, that is a conversation I would love to have with you. You can always go to intentionalwealthpartners.co, schedule a time to have a conversation with somebody from my team. Let's talk. I want to close with something that I come back to again and again in my work, and that is that money is emotional. It is tied to safety. It's tied to security, to everything that we have worked for and everything that we hope for. So when the market drops, it does not just feel like a number is changing. It feels like a real threat to our safety. That feeling is real and it makes sense. And it does not have to drive your decisions. Intentional money means you have thought about this, right? You have planned for this. You have a strategy that can hold up in a week like this one. And if you don't have that yet, that's okay. That's what we're here for, right? It's not too late. You deserve to feel steady with your money, even when the market's not. So I'm going to be here for a few minutes after we wrap up. Feel free to drop any comments in the video Any questions that you have, I will absolutely come back and respond to those who are watching the replay. Remember that steadiness comes from clarity, right? It doesn't come from the market cooperating. And if you know somebody who would benefit from this particular video, please share it with them. I know there are a lot of people. I mean, I talk to enough people every single day that there are a lot of people who need to hear this message today. I mean it. So if you know somebody, please share the video with them. Let them know that they don't need to be scared, right? That's why we have a plan. That's why we have strategy. That's why we have the support to really help you reach your goals.